Hi guys, this is Vlad, and today we are going to talk about order blocks. I wanted to show you very quickly two types of order blocks that I am using in order to find high probability setups. Um, and I know many of you like order blocks and wonder why sometimes they don't work, sometimes they work. Um, and that's why I wanted to show you the best order blocks that I personally find very easy to spot and trust. They give very, very little drawdown, and they give the most explosive moves. Okay. Uh, so, first of all, these are two trades that I took yesterday in London. You can see them. For some reason, by the way, Trade of 8 is deleting my executions once the day is over. So next day I cannot see my executions, like these little arrows for where I entered and exited. At least on TradingView, I cannot see them. I still can see them on the TradeAway platform, which is weird. But anyway, I marked the entries for you, so you can see them. First of all, what do we have here? So, what is this short in London? Right at 310. Price was climbing up all morning, and it was after sweeping Asia high, it was reaching up into. Let me just quickly go on the 5-minute chart so you can see it. It was reaching up to this buy side liquidity, which was yesterday's PM session high, and also it happened to be yesterday's daily high. So the daily high level, since it was a single top here, I was not expecting that we will purge this right away. Whenever you see a single top, so no relative equal highs here, like how to explain it. For example, see this top here, how it's at the time we're down here and start climbing, this single top, there is no relative equal highs here. So once we start going for it to take it, you can expect that price will go up, it will almost reach it, and then it's gonna fail. Okay, it's gonna go down to a pool of liquidity or a discount array in this case. So it's this fair value gap here with an order block, and then it's gonna go up to purge this after it engineers relative equal highs. Because it why is it engineering relative equal highs? First of all, because this way we are trapping dumb money or retail money into thinking that this is a level of resistance. Relative equal highs in retail world means level of resistance, so we are going to go down. We start printing those down close candles here, and most people are thinking, oh my god, it's gonna go down, we're gonna go back to take that low. But no, we're just going down into a discount array, and from then the move up starts. Okay, you know the logic now. Same logic I applied when we were reaching for this high. Once we went very close to purging it, I was expecting that there will be a level of retracement, a deeper retracement, because there is no relative equal highs here. Can we just go on and purge this high? Yeah, we can, of course. That can happen. But it is most likely because it was the time of day, um, and the way price action behaved at certain levels that I'm going to explain now, it was most likely scenario that it's going to fail. That's going to be a failure swing. And then we were going to go down into a discount array, which I'll explain also in a bit, before going up to purge it. So I took this short down to here, and then I also took the later portion of the long going for previous day high or previous PM session high. Okay. Now, What is all this on the 1 minute chart? We'll take a look now, and I'll show you two high probability order blocks that you can utilize in order to find the best entries, okay, using order blocks. First of all, as we're going up to this high, you want to watch what is price doing right here at the constant encroachment of this highest wick. My FIP is considering a 15-minute constant encroachment, but I'll switch it now to this 5-minute wick. So you want to take the highest wick, okay? And do you see that by some weird coincidence, the order block that I marked on the 1 minute coincides perfectly, perfectly to the tick with constant encroachment of this wick. So since they coincide, I'll remove the constant encroachment of the wick so you can see there is an order block right there on the 1 minute chart, and we're going to look at it now. So this is the 1 minute. Let me make it bigger. I'm not going to use the 5 minute anymore. So just so you know, here, this is the order block, the last up close candle of this swing high. Okay, we have here on the 1 minute this triple top. So 3 attempts to go higher, and all 3 are failing. Order block with a huge down close candle here, which is a CB. So you can expect this CB to be filled. And I was anticipating that. But you can expect that this last up close candle will act as an order block, a bearish order block. Okay. Let's see what price was doing on the 1 minute once we reach that level. Look at that here. Isn't that beautiful? Going into the order block, with the wick, we touch the body of the order block. Okay. So that body is the most sensitive part. I mark the wick here so you can see how it coincides with the 5 minute constant encroachment of the largest wick of that swing high. But if you mark the body here, you can see, let's see, look at that. If you mark the body, we're going just 2 ticks into it, and then we drop. The body is the most sensitive area, okay? Anyway, I'll remove this one for now. So that's a high probability order block. Why? Because it was a singular high. We had a 3 failure swings to go higher. It's a singular high. We're approaching it, and now we're approaching it when 308 is here, 310 is here. So by the end of the macro window, we did not purge that high. What are the two purposes of a macro, guys? One, to take liquidity in the form of old highs and old lows. And two, to reprice an imbalance, okay, to redeliver an imbalance. So what did we do here from 3 o'clock all the way to here, this failure swing? Did we purge a high by 310? Did we purge a high here? No, we didn't. Did we redeliver? Let me make it something more neutral. To a fair value gap. Let's see. Yes, we did. We filled the fair value gap, but we didn't purge the high. So that macro now is over by here, by 310. And it didn't take a high, but it did fill this CB. So that should ring a bell to you. That's how you use time. Okay, macros, guys, once again, they exist. They absolutely do. And they have a purpose. And if you know what's their purpose, you will be able to recognize when such a failure swing will occur and when it won't. So I was looking at that, seeing how it's gonna finish delivering the macro. And it finished here, 310. 311, I was in. Here was my entry. And I'll remove this green box so it's a little bit more visually appealing when I'm explaining. So I enter here a little bit of a sloppy delivery. I couldn't hit it as it was delivering this CB to this CB. There is a small little volume imbalance as well here. Look at that. We're balancing with the candle bodies. First an up close candle, then a down close candle. So this volume imbalance is now balanced. This little range here was completely balanced. And then price is allowed to go down. Okay. This is your market structure shift here. Then we go down, form a small little CB with a volume imbalance here. See how it's respecting it. And then we go down. I exited around here, around 330, as we filled this BC. Ultimately, price drove to here, which is an interesting level that I shared, or at least hinted at, in my last video. I'll leave a link in the description. If you didn't watch it, feel free to watch it. It's something that I discovered when I was studying the 2024 lectures uh, about the fractal nature of the market. And that BC here, why did I mark this one and not this one? To prove a point. This BC here, this is the first presented fair value gap after 230. Okay. We delivered that perfectly here and here, formed an SMT, and then started going up. Look at that, 4 o'clock. 350 we delivered to here. 4 o'clock is an open low, and then high. By the way, guys, here, talking about the previous setup, from 3 to 310, that's an open high on the 3 o'clock candle. Okay, so this was the low to here and close. So an open, high, low, and close happens all the time. And if you pay attention to the PD arrays, to open, high, low, and close, to time and price, you'll be able to pick these perfect setups. So let's see when price rolled over here and started going up. This was my second entry. I caught it a little bit late. See, I caught it from the middle of the move. But this little order block here was enough for me to take that long to the relative equal highs that now formed between yesterday's PM session and today's London high at 3. This was also an order block entry. I marked the order block and I'll explain now to you why is this a high probability order block. This is the easiest by far for me personally order block to identify, and the one that I trust the most that it will give me a very clean move. And in a way, it's also confirming that this is a fair value gap that is not going to fail and it will stay open. This is the best order block out there, personally, for me. Easiest to identify. Very, very good moves. Very little drawdown, if any. Um, and very, very small stop loss. So once we shift the structure here, once we shift the structure and started displacing up aggressively, this here now is this range, this big CB was balanced by these up close candles. We formed a BC here, two down close candles. This down close candle, which fails, let me remove this one. This down close candle now fails to reach consequent encroachment of this BC. This should be green, by the way, because it's acting as support and it should send price higher. This down close candle, bearish candle, fails to deliver to consequent encroachment of this BC. And then the next candle completely overtakes these two candles, these bearish candles, and closes firmly above them. Whenever this happens, the down close candle fails to deliver to consequent encroachment, and then the single candle trades and closes above the opening price of this down close candle, so the consecutive ones. This is now a high probability order block. High probability order block. Look also, guys, where it's forming relative to the range on the left. It's around equilibrium. Okay, if you can eyeball this range on the left, pretty much, you can eyeball and say this is around equilibrium. Let's measure it. Look at that. From top to bottom, this is your equilibrium, the red line. Look where the order block formed, guys. Went just, that's 2 ticks below equilibrium, formed the order block. You now know that this really is a balanced price range and that price is not interested in delivering lower. Not for the near future, okay? We are going up. We're definitely going up. And where is the most logical pool of liquidity? Those relative equal highs that we formed, okay? You can place your aggressive stop loss would be below the order block or just below consequent encroachment. Apologies, just below consequent encroachment of this fair value gap is fine, or one tick below the order block. That might be a little bit too aggressive. Sometimes it may wick down and take you. Wick down. It's not going to close below it, but it may wick down. If it's a little bit more manipulated market, this might happen. Conservative stop loss will be below the fair value gap. And then once this order block forms, look at that. Each next down close candle that we overtake with up close candles starts acting as support on price. Look at that. First is this order block, then this one. These up close candles, once we close above the opening price of the highest one, sorry, see how it's respecting it. They are acting as support. Once we close here, they are acting as support on price. Okay. This entire range, by the way, is an order block. Support, support, small little volume imbalance here. Pay attention to that as we went down to touch it. Support, support. This here acted as support on price and then up. And here is when we purged the relative equal highs. And a little bit after that, it fizzled out and went down again. So high probability order blocks. One more time. First, it was this one I showed you on yesterday's PM session. Last up close candle, when it's a singular high, look at this huge CB. Pay attention also to time of day. Watch if we're gonna take this high during the macro or not. Okay, if we're gonna stop here during the macro or not. Okay, at the CB high, right where is the order block. And then the other high probability order block, failure to trade to consequent encouragement of a fair value gap. And then the order block forms. This, guys, this is the most, for me personally, easiest to see, recognize, and trade order block out there. Okay. Anyway, I hope this clears out high probability order blocks and how I like to trade them. And if you have any questions or you want me to break down some other PD arrays, let me know. Please leave a like on the video and subscribe to the channel if you're new to help me grow an audience here. Okay. And until I speak to you soon, guys, I am out of here.